the last 2 months, the RBA has increased the cash rate. Originally, it was 0.10, and then they lifted it up to 0.25% to 0.35% last month, and then 0.50% this month. And now the official cash rate is 0.85%. So what does this mean if you have an existing home loan? If you have a loan of $500,000 and your interest rate is 2.50%, this means that your rate will go up to 3%. So if you're currently paying $1,976 on a 30-year loan term, that repayment will go up to $2,108. And that's a difference of $132 a month or $1,584 a year. So what happens if you're on a fixed rate loan product? If you manage to get that 1.89% 12 months ago, and the rates at that time were really very competitive, you can really get rates below 2%. And if you manage to get that fixed rate, then of course that fixed rate expires in 2 years or 3 years, whichever period you choose. So if you're on a fixed rate of 1.89, you get to keep that rate until that fixed rate expires. And then eventually, after 12 months, that fixed rate switches to a variable rate. So that 1.89% is gone. And whatever is the variable rate at the time that fixed rate expires, that is the rate you will get. And because right now, variable rates are trending upwards, so expect that variable rate you will get in the future to be higher than 1.89. So right now, the rates of variable are between 3% or above 3%. So 12 months down the track, expect something like a 4% variable rate. According to CBA, a major bank, they're forecasting a cash rate of 1.35%. So that's another 0.50% rate increase from the 0.85 that we have today. And that is something that they're expecting by the end of the year. So what happens if you're a first home buyer? What happens to your borrowing capacity? If you're a first home buyer, expect your borrowing capacity to go down. So let's say you're on an income of $100,000 annually and you have a $5,000 credit card limit. Now, your borrowing capacity at this stage at 2.99% is $590,000. But because the rate is going up to 3.49% because of the 0.50 rate increase by the RBA, then your borrowing capacity goes down to $550,000. It's much worse if you're on a lesser income. So I calculated the numbers if you're on an income of $75,000. For a $75,000 income annual, a single borrower with a $5,000 credit card limit, at 2.99% interest rate, your borrowing capacity is only $360,000 because the rate is going up to 3.49%, a 0.50% rate increase, your borrowing capacity will go down to $330,000. So it's much more difficult if your income is less than 100 because if you think about it, what can you get here in Sydney for $360,000 loan amount? Even in Melbourne, probably you have to go further out to be able to buy an apartment at $500,000 or $400,000. If you're a first home buyer, speak to us, give us a call. My name is Maria Papa. I've been doing mortgage broking in the last 11 years. My number is 04301-44008. You can email me at mpapa@maverickfinance.com.au. You can check out our website. We're on LinkedIn, we're on Facebook, we're on Twitter, we're on Instagram. Just Google us and you'll find us.